Going well. Just doing some final touches. All right. 3 minutes to go and we're good. Have you got that cleanse stuff yet? No. Did you order it? We could stop at a vitamin shop. You should pick it up. Oh, the kidney and liver cleanse, right? Oh, that's what. Yeah. No, that's good. I'm glad you got that. Okay. All right. Yeah. You feel different. All right, got 2 minutes. Yes, sir. See you on the other side. Good morning, everyone, and welcome. This is Joe Scarice, your co-founder and co-host of the Creative Birth Strategy Podcast, here live on Clubhouse every Sunday morning, 9 a.m. Eastern Standard Time. Look forward to getting into another great discussion of real estate, education, strategy, and networking. So let's get started here in just a few minutes. We're going to invite some peeps up, invite some people in, get rocking and rolling. Just give me a few minutes. My thumbs only work so quick. What a past busy week, and we finished it off with a great workshop yesterday, which we will go into detail in just a few minutes. We'll get rocking here in just a few seconds. I'll invite some people up. Just give me a few minutes just to get rocking and rolling. Obviously, we have some big discussions to talk about today. Our discussion today is the success cycles of real estate investors, and their strategies. But, obviously some recent events in the past 24, 48 hours might take up some of our discussion and where, we might think where rates might go and impact our world and see how that's going to go along here. So get rocking and rolling here in just a few minutes. All right. So my name is Joe Scarice at Lenmar Capital. I'm a nationwide direct private lender, providing asset-based lending for real estate investors and brokers and correspondents to lend to their clients as well throughout the country. In the DSCR space, 1 through 4, 5 through 12, mixed use, 2 through 8, as long as there's a residential blend into that. We'll look at fixed to rent, fixed to flip, new construction. We really don't have ceilings on that. We can go as big as you want to go. We do general construction lines of credit. We do also unsecured business lines of credit. I'd like to thank our sponsors, of course, Mr. Yerdal Perkins of Perkatech, who provides our social media design, architecture, video, everything, works with real estate professionals throughout the country, helping them build out their social media presence and brand. I'd like to thank MB Capital Solutions, where I'm a referral partner in the unsecured business lines of credit space. I've been providing unsecured business lines for clients probably for the last 10 years with them in collaboration. I'd like to thank also Miss Linda Pelagas of Realty 411, who provides national events and national publication for real estate professionals throughout the country. And then I'd like to thank TCS Property Management, where I have my real estate licenses in New Jersey and PA, providing property management services and maintenance for real estate investors throughout. They're probably like in 20 markets now. So if there's a market that you're looking for property management or maintenance, I would reach out to me and I could put you in touch with the proper powers may be that are involved. And then, what I'm really excited about with the networking events, which we'll talk about in just a minute, the events that we're holding with the Sub 2 community and Owners Club through the Real Estate Mastermind Strategies Group. We're now in New Jersey, in the North Side, South Jersey. We're doing some work in Central Jersey. We're up in East Stroudsburg. We're down in Delaware. We're going to be in Harrisburg. We're in Philadelphia. We're in Lehigh Valley. We're in Connecticut. We're sponsoring events in New York and Maryland. So we're really growing out our presence with the Sub 2 and Owners Club community. And that kind of ties into a workshop we just had yesterday, which is on asset-based lending and white label marketing. We had approximately 30 plus real estate professionals and investors in the room or online. Quite exciting, kind of giving that insight and understanding how to underwrite DSCR, fixed to rent, fixed to flip, questions, concerns, new construction, multifamily. We're diving in so many different directions. It was a great 2.5 hour workshop. We are having them almost every month in different markets. We'll probably have it again in August. We definitely have one scheduled in September in Lehigh Valley, but in August I might schedule one out somewhere. I'm not really sure exactly where yet. We'll figure that out when the time presents itself. But yeah, it was just a lot of great, insightful questions and concerns. It gave all the attendees homework. They all have homework to do. They know what they got to get done to be better real estate professionals, or potentially white label a product and learn how to broker money, and which is quite exciting as well. So I got to get a couple more emails out this morning. But today's discussion might pivot a little bit because we're talking about the success cycles of real estate investor strategies, right? And we're in a reset cycle, as we know, right? But obviously, one thing or another could move one thing to the right or the left. First, we'll just talk about mortgage rates this past week. It was very underwhelming. Housing starts to slide in May. Single family has been holding steady here and there. Rates have been around 6.86 to 7%, depending on who you talk to on the 30-year, commercial or residential. And, the job reports were kind of okay. They're starting to make some rebounds. Inflation staying really steady. The Fed has done nothing. I feel like they are really not a factor in the equation as much as they thought they were at one time. I wouldn't be surprised to see a restructuring of the Fed in 26 as we get closer and closer to next year with Powell's contract expiring. So that'll be interesting to watch. But, obviously we know in the last 24 to 48 hours, the U.S. missile strikes on Iran this past week could affect global markets and ripple into the mortgage rates in the U.S. And this is what's happening. Markets have reacted to the strikes with a flight to safety, pushing investors into U.S. Treasuries that drive Treasury yields lower, which typically means mortgage rates will dip in response. Recent data shows this action that the average 30-year mortgage rate has fallen slightly, landing around 6.81 to 6.84, like I was saying, just from its highs on just under 7%. What you should expect to see this week, modest but noticeable drop with a geopolitical shock fresh. Expect mortgage rates to hover in the 6.8 to 6.9 range. So we might see an eighth drop in the rate. Volatility does remain. Broader inflation and Fed policy concerns could offset the drop, but conflict-driven safe haven flows are currently the dominant factor. Some broader context, the Federal Reserve remains cautious. Rate cut expectations are being tempered by inflation fears. They did nothing this past week. Okay, maybe they had a feeling what was going to happen with Iran. Housing fundamentals, like weak builder sentiment and low inventory, are pressuring markets. Any reductions in borrowing costs could fuel demand. Bottom line, mortgage rates are likely to dip slightly in the immediate terms due to safe haven Treasury demand triggered by the Middle East escalation. Expect average 30-year fixed rates around 6.8 this week, possibly holding in the 6.7 to 6.9 range. But watch out. If inflation fears and Fed caution reserves, they could blunt any rate gains. Okay, so in short, the missile strikes on Iran are likely, pulling mortgage rates down modestly this week via Treasury, but broader economic forces will determine whether the dip sticks or reverses. Flipping market has slowed down, and as underpriced homes disappear, where's the nation most affordable rental markets? Right now, we're looking at Buffalo, New York, Oklahoma City, and Louisville, Kentucky. I like Louisville a lot. I like Oklahoma City a lot. Buffalo, I like. I'm probably going to be in two of those markets in the next 60 days. Definitely Oklahoma City and definitely Louisville. Buffalo, I might be up there for one function or another. But the rental, the barrier of entry, the landlord capacity, the landlord friendliness, or the balance to the landlord-tenant world is there in those markets. Very expensive markets right now: San Jose, California, New York, and Boston, Massachusetts. So let's get into our discussion. We'll open it up to our moderators as well. Why don't we start with the discussion at hand? Let me backtrack here, because obviously this discussion might pivot today. How will the missile attack on Iran by the United States impact mortgage rates this week? I don't want to get too political. I want to see how it will impact, cost in or concerns about investors. Is it going to slow any investors down? If they see a quarter point rate in the difference, does it make any difference in what they do? Bob, good morning and welcome. Brief overview, who you are, what you do, and thoughts to our discussion this morning. Success cycles of real estate investor strategies, but your thoughts to how this week's going to look like for the investor.
Hey, Joe. Hi, everybody. My name is Bob Chesek. I'm president of Chespin Corporation. I set up companies, LLCs, and corporations. I'm not here to give legal advice. I'm not a lawyer. Joe, I apologize. I was having we're having a little trouble with the phone, so I didn't catch your normal intro here. But looking at everything that happened, and just I admit I know what happened overseas and everything. I haven't really read the articles yet. on it this morning, but looking in general at similar situations in the past, and of course this one's a little bit more extreme if you think about the last time we really had a big situation in that part of the world with that country was probably back in the 1970s during the Carter administration. So this is going to be something that I think because it happened on a weekend, it might not be as impactful to, first of all, overall the markets, because again, it happened on a Saturday versus happening in the middle of the day when trades could go wonky either way. But it's definitely, I think at first, it's definitely going to create an era of caution because people are going to be concerned, all right, well, what's going to happen next, especially as the global stage unfolds here. But moving more into the topic at hand, I'm not seeing, I mean, and again, this is with the limited information I've read about it. I doubt very much, at least on a local basis, that it's going to have a lot of impacts on people's decisions because unless for some reason it tightens up the financial markets in some way or another, deals are still going to happen. Real estate transactions are still going to be going through and people will be pushing forward. Really what I've seen that it impacts deals more sometimes is actually just the time of year with people being on vacations and whatnot. This is what I call the summer slowdown for us because we just have a lot of people that are on vacation and they're putting things off till the fall and the kids are back in school and whatnot. So honestly, I think that kind of has more of an impact on it, especially since we're gonna, we just had last week was a holiday week, and now we're after next week we're going to be yet another holiday week. So I think it's going to be more of a seasonal situation versus the the global situation, unless something heats up with that really quickly. And just I guess you could say I'm kind of the optimist here on the market. I know with especially with a lot of stuff going on in the country, but I every now and again you see something happen that causes a little bit of a slowdown. Definitely noticed this year that people are a lot more conservative in general with pulling the trigger on things. As I mentioned a couple weeks ago, we had a record number of people with the Delaware LLCs default this year. Record number in the 20 plus years I've been in business where they just did not pay their annual fees to the state, and now they owe back penalties and taxes, and we're in the process of resigning from a lot of them because they didn't pay our fees either. So I think still at the end of the day, it's really just going to depend on how it affects the dollar and the economics of people's personal financial situation, and access to credit markets is really where if any impact comes out of this, that's what's going to fall, global trade notwithstanding. So that's kind of my thoughts on it. But again, I'm not even going to pretend to be an economic expert, but just after 20 years of seeing these kind of things happen when you're in business, you kind of get a feel for things. Again, nothing was intended as legal advice. Joe, I toss it back to you.
Bob, thank you as always, man. I know we have you scheduled for like 3 events to speak at coming up in the next couple of months. Quite excited to get you back off the bullpen and get in front of some real estate investors in the upcoming months. So look forward to co-hosting you.
Yeah, and thank you for the invitations.
Yeah, it's going to be a lot of fun. I've known Bob now close to 15 years now. We met at a networking event. We've stayed as colleagues and business associates for the last 15 years. I consider him a viable part of my team of experts when it comes time to structure deals with LLCs and my clients, and even more so now that I'm in the commercial lending space for the past decade. And, listen, I am seeing still a very aggressive push to buy real estate investment properties right now. There's no slowdown. There's multiple offers going in at the same time, a lot of competition, a lot of cash buying compared to financing. Real estate agents need to wake up and realize that the home buying is flatlined or non-existent in a lot of these markets throughout the country. The first-time home buyer is waiting and watching, especially with what's happening here over this past last couple of days, along with some reports that could concern the consumer, worrying about their job and job reports, and will they have a job, and will they have 2 incomes, and can they afford this? Should they overpay right now with markets receding? And this ties into our discussion today of the success cycles of real estate investor strategies. You know what I mean? Education and preparation phase, building foundational knowledge and getting financially prepared. Some strategies there. Study market cycles. Like Bob hasn't dug into it yet, but he's going to dig in because it could impact his bottom line. What type of property types? Financing options, networking with mentors and lenders and agents and contractors, and building your personal credit and establishing business credit. It befuddles me like what happens where people think that they can get a loan with a 550 credit score. Guys, gals, get your head out of your, you know what? Fix your credit. It's not happening. I don't care how good the deal is. Your credit's crap, fix it. I don't care about the story, fix it. Choose the right investment model, wholesaling, BRRRR, fix and flip, rentals. Then understanding your market analysis, right? Deal sourcing phase. Identifying target markets. Why aren't you realtors working with more wholesalers? That's what they're spending 10 times more money than you. They have better tools than you, than the MLS. Believe me, they do. Their AI is 10 years ahead of any real estate agent in the business right now. There's not enough unicorn real estate agents in the market. Build strong deal flow channels. Use deal analysis framework. Understand what cash on cash return is. Understand the Mayo formula. Understand debt service coverage ratio. A lot of light bulbs were going off yesterday. People were learning stuff and looking how to scale. Value creation, renovation phase. Understand renovation budgets. Understand how to add value. Ensuring permits and inspections are handled properly. Stabilizing rental cash flow. What is the perfect BRRRR today? Is it 65% LTV on ARV? Is it 70% LTV on ARV? Is it 75% LTV on ARV? Scaling and systematically phasing CRMs and project management software and bookkeeping tools into your day-to-day activities. Understanding cost segregation and depreciation and 1031 exchange. Monitoring and improving in property performance. Rent increasing. Expense reduction. Leveraging your LLCs. Cycle repeatability. Successful investors revisit the cycle with each deal or portfolio expansion. Each phase builds on the last, improving efficiency, risk mitigation, and long-term wealth creation. Stephen, good morning and welcome. Got a lot to think about and discuss. Brief overview who you are, what you do, thoughts to our initial discussion on how it will impact the bottom line of our market this week, and then the success cycles of real estate investor strategies.
Hi, I'm Steve Franco. I'm a broker and some other things. Currently searching for more self-storage, more multifamily, and I'm bringing out actually a tool that will be launching the end of July that is basically CRM, financial tracking, and all sorts of things for real estate investors, basically what I've been running my business on over the last little bit. And I think that I'm not glad for a lot of it, but I am glad that it happened over the weekend. Hopefully it will minimize the impacts, at least on the short term, to the markets. Obviously, where it goes next will be a different question. But I'm not seeing any slowdown up here, and I'm not seeing much reason yet for slowdown in terms of my tenant backlog, my tenant waiting list is still very large. You know, the opportunities are coming in, although they're still coming in a little higher price, but it's starting to come back to what I think sellers need to be at. We're not in 22 where people are going to spend stupid money. And I think that it'll be interesting for me to see where the tariffs and where the other expenses come in, and also where rates go, because that's going to affect whether it keeps running. And there are a lot of cash buyers I'm dealing with, but when I'm going to look and buy myself, I'm looking at rates. I'm looking at how does it purchase and how the numbers are. So I think that the thing that I'm looking for now is going to be the stability in terms of whether people maintain confidence if the international situation gets worse. But on the sort of operational level as a real estate investor, I don't see any signs of any lack of confidence within my investor community. Almost, if anything else, is getting more confident, which I was a little surprised by, honestly. I actually just, that gentleman we spoke about last week with the loan, that fell apart. I ended up doing this, that as a flip, and it's my first flip in several years. So everyone, please wish me luck. I haven't done one in a while.
Well, thank you, Steve, and thank you for your insight this morning. Why are there so many real estate investors in the real estate market today? There are more real estate investors in the market today than ever before for a combination of reasons: economic, social, and technological reasons. I'm going to break it down a little bit. One, economic. There is more money than real estate deals. There is more money than real estate deals. I'll say it one more time. There is more money than real estate deals in the space. There's also the social piece, working with people that you're building a community with. Like yesterday, there was so much synergy in the room with 25 people in person and 25 people online. There was synergies. There was a lot of energy, a lot of positive moving forward and scaling discussions, growing discussions. And then the technological piece. I feel the average real estate investor that I see today is 10 years ahead of every real estate agent in the market today, technologically, with AI, with identifying off-market deals, a buyer's list, marketing, social media. I went to an event this past week because a young lady invited me because she just joined a real estate team. I looked up that team leader. I could not find him on LinkedIn. No picture, no nothing. I saw like a little abbreviated thing about him, but it wasn't even pertaining to what he's doing today. And I couldn't find a really strong social media presence. And this is a team leader. And I'm like, I went up to her and said, like, have you done some research on your team leader? And she's like, oh, kind of. He's a go-getter, blah, blah. I'm like, listen, you have more presence. You're the one that should be the team leader. And real estate investors know real estate is a proven wealth building vehicle. Low inventory plus high rental demand equals opportunity. And the access to alternative capital has exploded. Technology and education are more accessible than ever before. And social media has glamorized the investor lifestyle, right? And shifting into careers, values post-COVID, inflation hedge, and tangible assets. But again, there's more competition. In hot markets, it's hard to find great deals. Margins can be tighter and risks increase for those with a solid strategy. Felix, good morning and welcome. Brief overview who you are, what you do. Thoughts to yesterday's course. I owe you an email. John left you out. I just found out this morning. I'll take care of that first thing.
Grand Rising. It was a pleasure seeing you yesterday. Felix Buchanan Sr., Buchanan Biz Enterprises, JLix Group. I am a team leader of Now We're Leaving Exit and going to Keller Williams. So Keller Williams agents. Of course, I do wholesaling, rehabs, business funding, credit repair, and a host of other things within the real estate business. In reference to the Iran thing, which is funny that I read that yesterday. I read a couple articles on it last night. I do agree with everybody in the sense that I believe because it happened over the weekend, typically if that would have happened through the week, it would have been a bigger buzz. It would have been all over the internet. It would have been all over social media. I didn't see it once. It was actually in a family chat that I seen it, and then I went and started doing research on it. So I don't think that it's really going to have a major impact to us other than obviously we know that Iran is one of the top powers when it comes to technology. They're above us because it's China, Iran, and Russia. So that definitely is going to have an impact at some point. But like they were all saying earlier, I don't see any slowdown here in Maryland. I don't see a slowdown in Houston, PA, Virginia, a lot of the areas in which that I do business in. Obviously, the market is more up and down in my eyes that it's dealing with real estate agents. I agree with you that at some point, real estate agents are going to become extinct because, like you said, I tell the real estate agents that I train, I say, I have more capabilities of being able to find out about a property faster than you, and you're supposed to be the expert. What I'm looking to train and tool these agents is to start having more off-market things available for their clients, especially their investor clients. So I believe that the strategies should not change unless whatever it is that you're doing within your scope of work or your scope of how you're running your business as an investor, if that market changes, then obviously you need to make adjustments so that you still can get the return on investment for yourself or your clients or what have you, and then still being able to produce successful numbers, produce successful returns on investments and things of that nature. So I don't believe that the strategy absolutely right now shouldn't change. Obviously, we need to pay attention to the markets, the stock markets, the tariffs, everything that's going on with the administration, which that ever since he became the president, that should have been let's just make sure that we're on point regardless, because we can see by a lot of the things that he's doing, he doesn't have a real strategy just like he did in the first time. So for me, it was just the strategy, even with the administration coming in, was kind of preparing yourself for some of the same things. And then based off of the things that he put out there that he was going to do, just kind of being prepared for it as best as you can. So that's my knowledge and wisdom for the day.
Well, Felix, listen, you and I have come full circle a couple times over the last 2 decades. We know each other a long time. What was different in the room yesterday than in the past events that we've been in party? I mean, we've been through a bunch of events through the last 20 years. Okay. Let's fast forward to yesterday. I mean, it's fresh in your mind. What separated that room of investors than 10 years ago or 15 years ago? What are they looking at from a success cycles of real estate investor strategies for themselves? And how do you think you plugged it in? I think you plugged it right away. Great. And then I wanted to see what your thoughts were.
I thought it was exciting. It was exciting just to see even though there was a different level of knowledgeability in the room, everybody in there was eager to learn. You had your couple people that were in there that were veterans that were also still learning things because of just different information that you provided us yesterday. I mean, it was insightful for me, and I've been in the business for years. I've dealt with you for years. I've sent deals to you for years, and it still was exciting to learn a lot of the strategies in which that you were just showing on how to put these deals together. I thought it was awesome that, in a sense, that I get to now really make life a lot easier for you as well as the client, because if I do this legwork ahead of time, and if I do this legwork properly ahead of time, I then have the capabilities of passing this on to you, and it allows for us to move a lot faster through the clients in which that we would be working with each other together. So it was super insightful for me, and I'm ready to hit the ground running with. It's funny that you said about the email, because I text John this morning and was like, hey, send me whatever wholesale and sub-2 deals you have in these particular areas. And also don't forget to send me my email because I got to do my homework. The excitement of that to gain more knowledge, and with doing the 10, like you said, hey, well, do these 10. And then by then you're going to become so knowledgeable with it. You're going to just be spitting it out like this. For me, I looked at that. That's like ultra beneficial for my client, because I'll ask you all these questions because I already know you. So some of these questions I probably know the answer to, but now I'm asking it for a different reason and putting it and setting it up in this format. But then I can put all your numbers in. I can see what's going to make the best sense for you, especially with what you have. And now when I give it to you, you're like, oh, okay, well, everything's in order. Dang, I'm able to get this back. And there's no client that's not going to be happy for that level of efficiency.
Felix, I appreciate that. And you know what I'm so glad is, like, we were able to connect the dots from the perspective of you in Baltimore, and now we're trying to find a space in Baltimore. Now you're working with John and Shiny, and you're putting another deal. You know, you're going to hopefully host a spot for them, and now you're going to be an intricate piece to what we're doing in building out this network. And maybe we'll host a workshop down there in Baltimore, teaming up with the Sub-2 community, expanding our presence, and getting more education out there to people. You know what I mean?
Absolutely. So I'm gonna give you a funny too. So I was talking to my broker partner on Friday, and I was like, it doesn't matter where he goes right now, I'm going. And it reminded me of when you first started doing those meetings in like New York and New Jersey and Philly, when you first was getting started, when I met you at Advanced Realty, like, oh, I'm coming to New York. And I was like, I'm going to follow him again, because these, like you said yesterday too, these little intimate meetings, people don't realize that you're going to gain so much more value than going to all of these big powwows, because you're really going to get to know people that know the markets, which is like me and Michael Johnson yesterday. He's like, well, I've been a contractor for these years. I've been doing real estate for this amount of time. Now you get to connect with people that do have experience, and then now you can combine your experience with theirs and open up your market to them and vice versa. So I was just like, yeah, I'm going to start going to the Jersey ones, to Connecticut. My cousins and them living, you know, I'm from New York originally.
Yeah.
So now for me, it just reopens those markets, because now you're going to be able to tap into these people.
Yeah, no, it's definitely a different vibe of networking now. And it's funny, I put a blog out, Felix, about comparing the big expos and the big events to the smaller events. And there's just more meat on the bone in the smaller venues. Do you know I had a group, I'm not going to name who it was, they say, hey, Joe, we know you want to sponsor a couple of our events. We got a great opportunity. We're going to have about 100 people in the room, and we'll give you 10 minutes in front of them for $1,500. I almost fell over and laughed. I'm like, what? How about $150? And they're like, no. I'm like, well, then good luck with that. They wanted $1,500 for if they could ask for $1,500 for 10 minutes. What could I have charged yesterday for that workshop to teach people how to underwrite their deals or to broker money and to make $100,000?
At least $5,000.
Okay, so and what did I charge? $5? And I gave you food? Not even. Some people didn't even pay the $5. I don't even care.
Right.
It's not the point. The point may be is this: we are in the biggest ripoff world right now when it comes to these events. You need to focus with a smaller circle and get yourself educated with people you can entrust and build and grow with.
Yep.
I can't believe they were able to just roll that off their tongue, asking for $1,500 for 10 minutes. I could not believe it.
But those are the ones that are more of the scammers, because just like this other mentorship that I'm in, we're dealing with debt, with securitization that's going to be huge, because credit card debt and auto loan debt is at the highest. And again, like you just said about these scammers, these capital ones, credit ones, all of them, they're collecting debts that they don't own because they securitize the debt. That's illegal. So you're collecting this debt twice when you've been paid for it, but it's the same thing in the method of what you're saying. You give all these classes, you want to charge all this money, but you're not even providing the value and service that we would be providing. And it's better to do it for free, because now when I say, hey, well, give me money for whatever it is that I charge for, they're not going to have a problem because they got all this value already. And that's what people don't understand. You want money, but listen to the value that I'm going to provide. Me coming in that room, that 100 people is going to do more business with you just because I spoke, and I can speak for 5 minutes. And here's what you're gonna get.
Yeah, it's just funny. I figured you get a laugh out of that. You know, where can real estate investing go for the rest of the year in 2025? And thank you, Felix. You know, real estate investing in the second half of 2025 is expected to be shaped by a mix of economic and political and demographic shifts, along with ongoing supply and demand imbalances. Okay, affordability crisis is still very present and is driving the rental demand. Okay. The creative and alternative financing is rising. It's going to probably take over 70% of the investment space easily by the end of this year. Okay. And then the creative piece, the seller financing, the wraps, the partnerships, the sub-twos, the private capital, wholesale to creative exits, white label funding partnerships like we discussed yesterday. Rehabs are making a comeback. Okay, flipping is slowing down. The Sun Belt is maturing. Look to secondary markets, to tertiary markets, maybe like Lancaster, PA, Chattanooga, Huntsville, Alabama. You got to watch the migration trends and job market growth and the infrastructure investments to target next wave growth cities. Midterm rentals and hybrid leasing will surge. Travelers, traveling nurses, digital nomads, displaced homeowners, fueled by 30 to 90-day stays. STR regulations are increasing, so MTRs remain under the radar and are still highly profitable. I'd be very concerned about STRs compared to MTRs. Okay, investors will pivot and trade and exit. Some long-term landlords may unload some underperforming assets to rebalance or retire. Others will consider syndications and 1031 exchanges or even larger assets. And then we're going into an election year, mid-year election year next year. Uncertainty and opportunity. How the election cycle unfolds and uncertainty may create buying opportunities. Policy shifts, like what's going on this past weekend, could shift interest rates and capital gains and housing regulation. Rent control is not funny and it's not going away. Could shake up a lot of markets. Stay nimble, keep liquidity available, and monitor policy developments that could affect your asset class. Real estate investing is no longer about who pays the cash fastest. It's about who can structure value, operate efficiently, and see opportunity where others see risk. Anthony, welcome up. Good morning. Brief overview, who you are, what you do, and thoughts to our discussion about the markets, success cycles, the workshop that you missed yesterday, but you were thought of and talked of in third party in a good way. So what's going on?
Good morning, Jeff. Got on here for you. My name is Anthony Capizzoli. I am a real estate investor. Started to do a little bit of the white label brokering with Joe. I missed the workshop yesterday, but I just want to add a couple things. I came here late, but for all of you that are trying to do it, my main thing is to get Joe's information and practice. We practice in running the deals, and it'll come second nature to you.
So, Anthony, your thoughts as a real estate investor, and now that you're doing lending, what's different for you now, and how do you dealing with clients or colleagues, and then looking at yourself as a real estate investor? Are you looking at things differently over the next 6 to 12 months as an investor? What's your thoughts on the lending piece and how that ties back to you as an investor? And how does that change your cycle as an investor and strategy?
Well, I started as the buy properties and hold and flow, and then I started getting into the lending piece, and that really piqued my interest. So I'm kind of still looking for properties, but looking to do more lending, private lending, and brokering with Joe.
So talk about some of the frustrations that you go through because you're lending, the way that you're doing your brokering, you're doing it as if it's for yourself, because you're an investor first, you weren't a lender first, right? So
correct.
So what are some of the frustrations that you're having that you now feel and see from the other side, instead of being the investor dealing with a lender? Now you're the lender with an investor mindset dealing with another investor. What's your thoughts on that?
Some of the frustrations are the investors not having the proper paperwork, or asking some crazy questions, or thinking that you're trying to get over on them all the time. Things like that. I just kind of run in that situation this week, but it's all going to be working out.
Well, yeah, and I think, and this is the funny part. You invited a client to that client we're discussing, right? And we'll keep it third party, to an event which only had about 15 people in the room, maybe 20 max. I think that went a far away for that individual with the conversation you were having with them this past week now, because they knew all the parties involved, right? I mean, do you think that helped things move along?
You coming and putting a face with the name.
Well, Anthony, I would like to thank you as always. We did talk about you in third party, that I put the pressure on a lot of people. I said that there's a gentleman here that is not here today, but had no lending background, probably knew very basic Excel terminology, for software, and is putting loans together on a day-to-day basis. And you guys are all in the industry from a real estate agent perspective or investor perspective. If he could do it, anybody could do it. If I can do it, anybody can do it. So, I did put a picture of you up, to let everybody know who you are, by the way, because you say you're staying anonymous with your picture right now, as we say.
Okay.
Nobody show. Can I do that?
And then 1 second either.
Yeah. Yeah, I'm going to look at it as soon as we're done with the podcast. I got a couple things to catch up on to hit the ground Monday. Because Monday I leave for Pittsburgh. I'm in Pittsburgh Monday. Then I'm in New York on Tuesday. But then I'm back in Pittsburgh Wednesday and Thursday. So I'm out in Central PA and Western PA all week. So I got to get myself ahead of the game for this week coming up. So, but Anthony, thank you for coming up for the first time. Welcome and stick around for a little bit.
You got it, buddy.
Thanks. So, strategy plan. Like, what are we doing for the second half of 2025? What are your core objectives in your success cycles, right? Is it better cash flow? Is it capital? Is it credit? Is it creating equity? Is it positioning yourself for opportunities? Then refining that market focus, renter demand, job growth, housing supply, affordability. As a real estate agent, what do you need to do differently to get the phone to ring? Is it video work? Is it tips of the trade? Is it branding? Is it blogs? Is it posts? Is it hosting your own networking event or events? Getting more consistent in front of people, attending more events, optimizing your current portfolio, focusing on off-market deals. We know what's on the MLS already. Everybody does. Everybody has almost complete access at this point. And that ties into what Felix was saying. Will the real estate agent be a necessary factor in 12 to 24 months? Will the realtor associations be a factor at all? And how much consolidation will happen over the next 5 years with AI and realtor associations, the MLS, title, appraisal? And how will that impact the real estate investor over the next 12 to 24 months? The draw process on rehab loans are changing. They're going virtual. It's a big push right now to do virtual draw schedules. Okay? And looking at other ways of making money with your rentals. Is it just the long-term rental? Does mid-term rental make sense? But you need to understand how that works from a lending perspective, or you could put yourself in a bad position or consider yourself over-leveraged. Audit your local market and your pipeline for hidden opportunities. Launch campaigns to focus on motivated sellers. Look at 1 to 2 creative deals a week. Prepping the funding and scopes for your clients if it's not for yourself. Understanding rehab construction and renovation. Reviewing your follow-up and follow-through. Have you been in touch with everybody that reached out to you? And did you send an email back to every single person? What's your email look like right now? How many emails are not been addressed this past week or this past month? Have you sent 3 to 5 texts out to somebody every day, different people every day, doing a check-in? Got to change the cycle for yourself. These are strategies that our investors are doing already. Real real estate professionals need to catch up with real estate investors. Bob, some follow-up and thoughts to our discussion this morning, the success cycles of real estate investor strategies.
Well, Joe, first of all, thinking about that $1,500 offer you had, I just want you to know I'm going to arrange for a meeting for you to give a presentation to my mom and my because it's you. It's going to be in Scranton, and it's only going to cost you $900.
But is that insane that somebody was able just to rattle off that email like it was no big deal?
You know, it was probably an AI-generated email too, which makes it even better. Because, well, then again, there are some crazy people out there that think they're going to get away with that, but it is what it is. I had an offer once 15 years ago. They wanted me to do a presentation in New York at the Javits Center, and they told me that I would get 20 minutes on stage, and they looked at Eric and I right. The person actually looked us in the eye and wanted us 20 minutes on stage, $4,000 to Eric and I. We just burst out laughing. I mean, we couldn't even stop laughing. I think for about 5 minutes. It was. I was looking around for those who remember. I was looking around for the candid camp. Honestly, it was ridiculous. But yeah. Anyways. So more thoughts on today, final thoughts on today's discussion. I mean, obviously a lot's happened over this weekend. We're going to have to see how the markets are going to bear out on this. There's definitely going to be a lot of things going on. I was doing a little reading on it. Russia and China are both condemning what happened, so Lord only knows. But all I can say is, we're entrepreneurs, we're real estate investors, and real estate investors, if you're renting out properties, buying, flipping, you're an entrepreneur too. So, entrepreneurs as a whole, you just do what you always do. Pay attention to what's going on in the markets, watch for changes, and adapt accordingly. Are we going to see tighter credit markets? Are we going to see looser credit markets? We don't know yet. This is all happening in real time, but one of the shall we say both the fun part and the challenging part of being an entrepreneur is being able to adapt in real time. And here we're talking about this condition. Last week we were talking about AI tools and other things. So it's there's part of me that wants to say we live in interesting times, but let's face it, they're always interesting times. But don't be afraid to adjust, pivot, or do what you need to do, because the moment you become stagnant, is the moment that your business withers on the vine. Again, nothing was intended as legal advice. Joe, back.
And I look forward to doing that presentation for $900 to your mom and the cat very soon. So, the second half of 2025 is rewards for real estate professionals. You must stay flexible, finance savvy, and direct to seller driven. Inventory may be scarce, but control, not ownership, is the new game. And be transparent with your professionals that you're working with. Real estate professionals do not want to feel like their time is being wasted. They want to see the cost-benefit relationship with somebody. Why am I working with you? That's going to be the question after after a couple cycles, and like, hey, Matt, we're not making money together. What's going on here? Like, how is this going to work? I mean, listen, we're here to provide professional services, provide professional insight. Be part of a lot of team of experts, but we don't want to be the welcome mat, right? So you got to look at the cycle. How many people do you want to surround yourself with? I'll give you an example. This past week, there was a couple of events I wanted to attend. I went to one during the day. I went to one with early evening. I spent about an hour there, and it looked like the same person over and over again that I was running into. I'm like, okay, I'm going to get out of here, and I'm going to go to another event. And it was great that I did that, because the other event, I was able to meet a whole other set of people, a little more humbling, which was nice, and a lot more professional about certain things, as basically on the one-on-one, and got to find out about a lot of other things. So it was good that I went to like a mixture of great events that one day, this past Wednesday, and it kind of tied into a lot of follow-up that I'm going to be involved with over the next week. And listen, I'm not saying that you have to travel 150 miles to create your business. What I'm saying is you got to dig down and you got to create things to make things happen. You got to put a blog out once a day, or an article every couple of days. Put a video up. Give your thoughts to the market. Give your thoughts to 5 tips of the trade. That's going to reset your success cycles in real estate. In real estate, whether you're working with investors, listen, some of the people down below might not want to work with investors. That's okay. You just want to work with first-time homers. Then talk about house hacking. Talk about home inspection checklists, seller's disclosures, how to do a listing presentation. You can share. I mean, there's 100 different discussions you can come up with. Host events. Become the hostess or host of an event. Be the key factor to people to come and congregate and network. Or collaborate with another organization. I think collaboration is more important now than ever before, especially with a lot of these groups that are especially the RIA groups. I mean, they're getting hammered. Okay, they were giant sell-a-thons. People are tired of the sell-a-thons. They want to just hit the ground running, making money together. They're predictable. Okay, and the people with any level of experience past beginner kind of get turned off and move on to other opportunities. So, like here, like this podcast that we do, we come up with a different subject every week. We're scheduled out to the end of November. We're not going to talk about the same thing over and over again. Well, that's insanity, okay? But also insanity is spending a lot of money without any results. And that is the strategy to your success cycle. Your success cycle in front of you is, what are you doing this week? Like, how many events are you attending this week? How many people are you going to talk to Monday, Tuesday, Wednesday, Thursday, Friday? Set some goals. Set realistic expectations. How many video discussions are you going to have? Are you going to be interviewed on a podcast this week? I've extended to everyone in this room to do a one-on-one podcast. Right? Or come and speak at one of my events. Nothing wrong with that. Come up with a subject, a bio on yourself, a professional picture, and 10 questions. That's either a podcast. That's either a podcast or a mastermind discussion at one of my upcoming events. It's not that complicated. You could do it through ChatGPT even. It's amazing. You could even make your own picture through ChatGPT. Bob, did you make that through ChatGPT?
No, that's actually a sketch of me hanging on. It's actually a sketch of me on a wall at a restaurant in Bear, Delaware. Everyone who supported them during the 2020 shutdowns, they took photos of us, and they had the local political cartoonist for the newspaper sketch us on the wall.
Well, I would have thought that was a ChatGPT. I might throw that picture through ChatGPT and see what comes out.
You know what? I've thought about it, it's probably one of those things I just kind of have to play with. And I admit I have not been playing with ChatGPT as much as I should be, but I never actually. You know what? That's something I'll probably do in my. I'll have to try and just see what happens. It'll be interesting.
Well, I'll charge you $1,500 for it for a couple minutes of my time.
Damn, that's a deal.
Steven, some final thoughts to our discussion on success cycles and real estate investor strategies.
Yeah, I think the most important thing on the success cycles is doing something every day your future business self will be proud of. Whether that's developing better skills by going to one of Joe's events, or other quality events, and watch out for those companies. When you said they wanted $1,500 for 10 minutes, I'm like, oh, they're just making money off their meetings. That's not the business model. Business model is education. But the biggest thing is do something every day. Like I spent the last 2 weeks redeveloping the software and kind of refocusing what I'm going to be doing with my own cash lending and so forth. And now it's time to implement that. And that's the other thing. It's fun to have the dreams. It's fun to have gee, here's my vision, here's my hope. If you don't get out there and do the boring stuff, you don't follow those 30 prospects every week or whatever your model is, boring stuff is where the money's made. The fun stuff is wonderful. The education stuff is necessary. But it's in that boring day-to-day task stuff that you really will ride the cycles, know the cycles, and in some cases be immune to them because you're already ahead of it. You already know where you're going.
Well, Steven, thank you. And we'll have to catch back up sometime this week in my travels. So thank you. Sounds good. Felix, your thoughts, final thoughts to the success cycles of real estate investor strategies. Felix, going once. Felix going twice.
Looking to get my mic unmiked. I would say, again, like everyone else said, be consistent with what it is that you're doing. Do a little something every day, no matter what. Make sure you set out a plan, and then recalibrate your strategies for the remaining of the year. Just be diligent with paying attention to what's going on in your market. Pay attention to what's going on in the news, valid information. And just make sure that the people that you're going at for mentorship, you research them and see, who they've helped, what type of strategies they have, the classes that you go to, the things that you attend. Just make sure it's not people that's looking to just get money from you versus absolutely providing you value. And that's my wisdom and knowledge for the day.
Thank you, Felix. The business model going for the rest of this year, especially for a success cycle for anybody that's listening in, these real estate networking events, they're no longer just meet and greets. It's a hybrid business model, merging education and lead generation, brand building, monetization. I mean, your core purpose, whether it's in this podcast, in Clubhouse, should be connecting with real estate professionals, right? Investors, agents, lenders, service providers, in a way that drives deals, partnership, brand visibility, and recurring revenue. There's the in-person structure event. Then there's the virtual and hybrid. Listen, if you're not comfortable hosting an event in person, there's nothing wrong with doing a virtual or hybrid. There's some great AI-powered networking apps, interactive deal rooms and polls and live chats. Create a Facebook group. Invite, if anybody's on Facebook with me and you're connected to any of my Facebook groups that I administrate, why haven't you reached out to me and say, hey, I'd love to be a moderator. I'll invite my entire network to this group and I'll leverage this group with my network. Go ahead. What's the worst thing that happens? You get some business out of it. You look like a leader. You brand yourself as a real estate professional above others. Realtors looking to serve investors need to understand their target audience. You need to have better one-on-ones with your private or hard money lenders, mid or high-level investors, contractors, property managers, and stagers, local business service providers. And what's your marketing tactics? Local Facebook groups, meetups, LinkedIn, Instagram, TikTok, Twitter, real estate investor email lists, partnerships with brokerages and lenders. Presenting. What's wrong with doing a presentation? Sponsor cross promotion. These are the recurring model is to be consistent, to be continuous. That's a successful cycle as a real estate investor or real estate professional. It's going to separate you from everybody else. I think people always want, hey, Joe, why do you do what you do? Because I love what I do. I'm very passionate about what I do. Joe, you're everywhere. Don't worry about where I am. Worry about where you're at. When somebody says that, they're actually constructively criticizing themselves potentially of what they're not doing. I don't worry about what everybody else is doing. I worry about what I'm doing. I focus. I have discussions with people. I'm very transparent. I like to be very direct. And I want people to be direct back to me. Listen, I tell a lot of people have various opinions about me. Guess what? They are 100% correct on all of them. But one thing everybody can say is I'm very consistent in what I do. And I know what I'm doing for the next week. I know what I'm doing for the next following week. I know what I'm doing the next 6 months. I know the type of events I want to be. I know what type of ponds I want to fish in. You got to weigh out everything now that you're mid-year here in your strategy. I want to thank our sponsors today, Mr. Earl Perkins of Perkatech, the most valuable person in this whole platform, our social media strategist, the man behind this podcast, good friend, colleague. I could thank Landmark Capital, where I'm a senior loan analyst providing nationwide asset-based lending. I'd like to thank MB Capital, where I'm a referral partner in the unsecured business line of credit program. I'd like to thank Realty 411 with Linda Pelagas, who provides a national publication and national events throughout the country. And check out our networking events that we're hosting. I love to collaborate with anybody that would like to host an event on white label marketing and underwriting, asset-based lending anywhere in the country. And hopefully I can provide CE for any real estate agents that are present there as well. We're here every Sunday morning, 9 a.m. Eastern Standard Time, providing education, networking, and strategy. And my quote this morning by Tony Robbins: "The past does not equal your future unless you live there." Have a beautiful Sunday. Have a great week. We'll see you next Sunday morning, 9 a.m., and have a great day. And I'll be ending the room in the next 30 seconds. And thank you.
Hey, if anyone's in the Philly area or New York area, heads up.